What's the occupancy rate of your hotel right now here in Hong Kong, the property?
In Hong Kong,
Yeah.
it's rising through the 60s at the moment, but really across the world, we've seen throughout 2022 a steady rise in occupancy, and in particular in rates. So in the luxury hospitality sector,
Yeah.
rates have been strong as people have been keen to get back to travel, get out and enjoy themselves and see things. It's been held back, of course, in East Asia with the restrictions that continued through 2022. But I'm very positive now of the outlook for 2023 with the borders open, people able to travel, the opportunities there.
And China, what's the outlook there from the group?
Well, actually, in China, throughout the pandemic in the early years, occupancy was pretty good, of course, because most of the business is domestic, and therefore people were still able to visit. And it was only in 2022 that the restrictions caused performance to lower. So coming into 2023, again, we've seen a very quick pickup in occupancy since January. And it varies, obviously, from week to week, but we've seen some very high performances both through Chinese New Year and since then.
What are bookings looking like the next 2-3 months?
The outlook is stronger than we would normally see at this point of year. So again, encouraging. And the key is the destination and the attractiveness. And because of the pandemic, we have seen something of a change in travel patterns and in terms of where our business is coming from.
Like what?
Well, particularly we've seen in the luxury sector, leisure is ever more important. People's desire to travel and people's willingness to spend when they do travel. So that's a key driver. I think secondly, whilst we will see corporate and MICE business come back progressively, it's coming back more slowly because people have changed their habits. I think the most significant thing, though, for luxury is that people at the top end of the scale will be willing more and more to combine leisure and business. So making a business trip and adding on 2 or 3 days for leisure, or being willing to go to a destination for a week because they can work from there. And the change in people's work habits have enabled them to work remotely on a much more regular basis. And that enhances the opportunity for the luxury hospitality sector.
Leisure, that's what they call it, right?
Yeah, I was going to ask. A lot of people, and including the people that have visited us from our other offices around the world, they haven't been to Hong Kong in a very long time. And what we tend to see is they come for work and then they stay for a few more days. Have you noticed a change in behavior of business travelers? And do you get that extension that they stay a few more days? And
that is definitely what's coming back. I mean, the comeback came in 2022 progressively as different parts of the world opened up. So we saw very strong performance coming through from the second quarter in Europe, particularly in the Middle East, which has been open for a while, and in the Americas. And then through that, we're starting to see through the summer months people willing to take slightly longer periods away because they're combining work with leisure.
How are you tracking the Chinese tourists now? Has those sort of consumption patterns changed? What does overseas travel
It's very
for China?
early to say on that, I think. The honest answer is at the moment, the visitor numbers into Hong Kong is uncertain, and it's mainly international travellers at this point. Domestic Chinese visitors to Hong Kong, I'm pretty confident we'll see come back, but obviously it's dependent on airlift and it's dependent on visa access. But the real growth story for Mandarin is very much elsewhere in the world at the moment, where the opening of new properties in the Middle East, in Europe, has been steadily driving our results. We had a really exciting moment in February last month with the opening of the Emirates Palace, which has been rebranded as Mandarin Oriental. And the strength of the performance in the European and Middle Eastern markets in particular, with rates in resort destinations, has been very encouraging for the future.
Well, talk to us a little bit more about the property pipeline. What can we look forward to this year?
Well, this year we're going to have 4 hotels opening. We have a second hotel in London coming up in the middle of the year. We have a wonderful hotel coming up on the Corniche in Muscat in Oman. Zurich will be a new opening towards the second half of the year. And we will hopefully have a property coming in Vietnam in the second half of the year as well. So we also have residences opening in a couple of locations. So all of those are good drivers. And I hope in the next 2-3 months we'll be announcing 2 or 3 new properties in key European destinations. We did actually announce in January a new property in Mallorca, which will be a great opportunity. We have a hotel opening in Greece in July, which will be our first resort property in Greece. So there's quite a lot coming through. And at the moment, we have some 25 hotels under development, particularly in Europe and the Middle East, but in China, some interesting ones. We opened in Shenzhen in January last year, and that's proving a great success. We have properties announced for Nanjing, Chengdu, Hangzhou.
Yeah.
I hope we will have a couple coming through, further properties in Shanghai in the near future. So through the pandemic, although travel for some has been quite limited, we have been able to progressively grow the pipeline of new opportunities.
You've been talking about, there are still certain, restrictions, visa access. When it comes to flights, it's hard to even get one in the region here, and ticket prices are still quite elevated. I mean, those seem to be things that might linger for a while. How long do you think tourism can really come back to pre-COVID levels in the region then?
I think it'll come back by the second half.
Second half,
At the moment, we're really seeing it returning, getting back to pre-COVID levels, 2018 type levels. I would see no reason why it shouldn't be able to return by the half year at those sort of levels. And the strength of rates is encouraging in that sense, that a slightly more modest level of occupancy in the luxury sector is no bad thing if one can achieve the rates, which is the way we tend to be focused.